Carrie Delgott, Wescott's Chief Operating Officer, and I'm here with Mark McCarron, Wescott's Chief Investment Officer. Great to see you, Mark.
Good to see you, Carrie.
Mark, the year seems to be flying by. We just closed the first quarter with strong overall market performance, and as we're looking ahead, feeling rather optimistic. Fiscal stimulus and the vaccine rollout have exceeded expectations. Equities overcame some bouts of volatility with the Dow and the S&P both hitting new highs last month. And given the progress of getting shots in arms and the continued reopening of the economy, investors seem to be telling us that they're feeling good. Can you expand a bit on what we've termed here as green shoots of recovery?
Yeah, no, absolutely. I think you're right in the sense that there is a sense of improving sentiment out there, and a brightening outlook. So we'll talk a little bit about that. As you mentioned, the U.S. is making really great progress in terms of vaccinations and vaccinating the population against COVID-19, and that's been a really strong trend since the beginning of the year, perhaps ahead of expectations, ahead of schedule. And that continues. And I think that's a big part of that sentiment change. In addition to that, and we'll talk a little more about that, but in addition to that, the Federal Reserve has determined to keep its policy rate low, even if inflation begins to rise. And again, we'll talk a little bit about that in terms of our outlook. We've got Congress passing the American Rescue Plan. And that's the third COVID-19 relief bill in the last year. And that's been a real boost to the economy, particularly in areas where demand has fallen off a cliff and there needed to be that extra support. We're seeing the evidence of improvement in terms of these green shoots in the U.S. Unemployment rate coming down to 6%. That was announced today. And I think that bodes really well for continued economic recovery. As more people get back to work, spending should improve. And actually, where is that spending being used? It's going to be spending on travel and leisure and other things that beyond just your technology needed to talk to each other virtually, you can actually go out for dinner, you can get on a plane and begin to travel. And we're seeing that's a great sign of economic recovery. So what drove that? Why are we turning the corner? It's ultimately, as you mentioned right off the bat, the vaccine program and the amount and number of the US population getting vaccinated. It seems like we're finally getting this pandemic under some control. We talked a couple of weeks ago about the light at the end of the tunnel. I think that's where we are. We're seeing the benefits. While confirmed new cases of COVID-19 have come down from their peaks, they're still at elevated levels, so it's still out there. So it's really important that the vaccines are made available, and particularly to those populations that are more vulnerable. And what we have here is a chart from the CDC that just shows the population older than 75 years old and between 65 and 74 years old. These are the two areas where the vaccines have been implemented the most, obviously, and over 50% of both of those age groups have been fully vaccinated as of March 31st. And it's the younger age groups that are beginning to get access to the vaccines, and that will only continue this recovery. So it's really a great news, and it's something that was a requirement. It needed to happen for the economy to get back on its feet. So what we've seen is a pretty direct relationship between the economic reopening, vaccine program and its success, and the stock market. So this US stock market continues to broaden out, and that's really where we're seeing the evidence. Last year, it was a very narrow market, very narrow leadership. And this year, you've got a lot more sectors and industries participating. And we've shown this chart before. So the first two indexes here, the S&P 500, which is what you see quoted in the newspaper every day, and then an equal weight version, which we've highlighted and defined last year, but basically it's the same 500 stocks, just not weighted on, the top companies don't dominate. So it's assuming that every company gets an equal share. And when that is higher than the overall market, that means that there's a broader participation. And actually, it's almost like a mirror image. Last year, what we saw was technology and large cap growth being the dominant, style investment. Well, this year we're seeing the Russell 2000 value. The cheaper, smaller, more economically sensitive sectors like energy, industrials, materials, they're the ones rebounding. And this has been a real benefit to Wescott client portfolios. In fact, some of the adjustments we made last year in client portfolios are being rewarded today, and rewarded, in fact, not just today, but the last 6 months, really since the vaccine announcements were made. And all of that is really critical and really supportive of the portfolio strategy that we came up with and the one that we have in place today. So I think, that's really what's going on in our portfolios, but I want to turn it over to you to just sort of talk through what we're seeing as a firm in terms of the key themes coming up for this year.
Thanks, Mark. And I really like the way we've oriented around these 4 themes. To start off, most global economies entered into 2021 in an early stage of recovery. And we've seen continued expansion throughout the first quarter as the vaccination rollout progressed. We, of course, expect this trend to continue. Second, the sizable stimulus package will help repair some of the most severely impacted segments of our economy. Adding to the recovery is certainly this pent-up demand to get out. For those with discretionary income, we're seeing growing spend on restaurants and travel and other leisure activities, as you mentioned. And this, again, is expected to continue and increase as the year progresses. And lastly, those who have lost their jobs will have an opportunity to return to work, and our children to return to school. All very positive themes. But the one concern I have been hearing from our clients is around inflation. And that's a topic we haven't talked about yet. I'm wondering if you could tell us more of your thoughts there.
Yeah, those themes of reopening and return to normal and the repair, ultimately from the fiscal and monetary stimulus, well, there's concerns that actually that will drive inflation higher. And yeah, I've heard those same concerns from our clients. And our view is that inflation will become more of a concern, but only when the economy gets closer to full employment. So we talked about the unemployment rate today at 6%. It's down from where it was, obviously, as people going back to work, but it's still well above what's called full employment, and there's a lot more capacity still left in the economy. And until that capacity is used up, inflation will not be the risk to the financial markets that it might be maybe 2, 3, 4 years down the road. So it is on our radar. It's something we look at. And in fact, some of our bond positioning today reflects that view, where we want to maintain high quality and shorter maturity bonds because those tend to have less exposure to the inflation risks out there. But as part of our outlook, inflation is part of it. The pandemic trade has, in fact, given way to the reopening trade. We talked about this almost 9 months ago, and we're well positioned for that. We think that economic growth will naturally accelerate as we return to normal, return to work, not just in the US, but also abroad. We've both talked about this, but the very accommodative fiscal and monetary policy and plans even for another spending bill on infrastructure, has the potential to really supercharge growth. And that's where that inflation risk is being highlighted. Maybe that's where it's going to happen. But we anticipate that the rotation that we've seen really since last October will continue. And that should help value stocks, global markets, as global growth returns. And that's really where we're positioned. We're seeing evidence of that in portfolios today, and we're hopeful that we continue to see this return to normal as we go through the rest of 2021.
Well, I, for one, am looking forward to returning to a more normal life again, although I do expect it's going to look a little bit different from our pre-pandemic world. I think we'll save that conversation for another day. Thank you so much again, Mark, for your continued perspective on the ever-changing market and economy, and how Wescott's portfolio strategy is well positioned to benefit from this reopening trade environment. And as always, please don't hesitate to reach out to Mark or your advisor with any questions. And thank you for your trust in Wescott.
Thank you.